It seems like any company that's talking about AI is rocketing higher. You're looking at AMD up over 100% this past year, a key chip manufacturer, ARM Holding. I recently did a video about them, more on that in a second. Recently up over 100%, down a little bit subsequently. And NVIDIA up over 200%, Palantir up 150%. These stocks are rocketing higher, and the common theme is that they're all participating in the AI revolution. In Palantir's case, it's about enabling customers to leverage large language models with their data. But for everyone else, it's about, hey, how do we enable it? The problem is this creating the setup for a crash? And I did a recent video on ARM talking about, well, wait a second, with ARM, you're talking about 20% growth. They're not even using the GPUs. It's the CPUs that ARM's powering. So more on that. Check out that video on ARM. And the valuation was like around 40 times sales. So you have this huge mismatch between the underlying fundamentals in terms of the growth and the valuation multiple, creating the risk that investors could be underwater for years to come. Now, using this comp analysis feature that's available for enterprise customers at AI Ticker Chat, you can see that NVIDIA is really the only one that's posting fundamental growth that's actually in line with this price dynamic, where you can see NVIDIA's, recent sales quarter, and they're going to report earnings later this week, but their most recent quarter, up over 200%. For Palantir, AMD, it's closer to 10 to 20%. So when you're talking about a move, a stock price move of 100% plus, and the underlying fundamentals are going, 10, 20%, that creates the risk that you're going to be in for some pain in the years ahead. You have to say, okay, well, what's actually driving my return? This is how investors consistently get in trouble, is they look at the change in valuation, which in this case, that's the bulk of the change for a company like Palantir or AMD. And they think, this is great. Valuation expansion is wonderful. The problem is, as I've called this out many times on this channel, over a multi-decade perspective, the benefit that you can get from valuation is close to zero. And you'll see that on something like the S&P 500, where the change in valuation really contributes close to nothing. And it's really driven by the free cash flow that you can get as a shareholder, as well as the fundamental growth. And so for these companies to be posting, let's say 20% growth in the years ahead versus a 100% stock price rally, it does create a challenge for, how does it perform in the future? As you keep pressing that valuation expansion pedal, at some point you could have it reverse. You also have the risk of a significant paradigm shift in the technology. Just in the past few days, a company called Grok, this is not to be confused as I initially was. You have to do a little research here. Elon Musk is coming out with his own AI model called Grok, but I believe that's Grok. But well before he had that idea of saying, oh, I want to compete with OpenAI with Grok, there was another Grok spelled Grok. And so they joined Twitter back in 2017, and they talk about how they're aiming to provide the fastest speed for AI applications designed and engineered in North America. And so there have been a lot of articles recently on how some of the open source models are going lightning fast using Grok hardware, which is really interesting because this is coming out of left field for a lot of people, where they were saying, well, wait a second, I thought it was NVIDIA with the GPUs that were doing it. They're saying, no. What we're using is something called an LPU, this language processing unit, that's actually much simpler, much faster, lower cost. And a lot of people are getting on board comparing the Grok chip versus the NVIDIA, saying, look, you might have this new crop of AI chip startups where Grok stands out with a radically different approach, and that their approach is leading to much lower compute costs and much faster speed. You can actually try out Grok, which compares itself to it's not exactly apples to apples, but if using it, you can see that it goes extremely fast. So that way you could... The part that makes this so interesting is when you're talking about AI applications where you need to have extremely, the latency needs to be perfect or near perfect. So that way you can have the equivalent of a conversation, or maybe it's an emergency medical services and you want to make sure the AI is processing and you don't have some sort of like it's taking a long time. Well, if you're able to power that with Grok, maybe you're talking about a step change in terms of this AI, development, in terms of what applications you can now use in situations where you need to make sure the latency is just as near perfect as a human can get. The critical applications. So this is an interesting development because it could be a paradigm shift from the GPU revolution that everyone's so excited about with NVIDIA. I personally take a step back and think, okay, let's actually look at the NASDAQ back in the 1990s. And this price action is what concerns me. Is you see this, from 1999 through 2000 to the peak in March 2000, the NASDAQ composite went up over 100%. It had this doubling. And the challenge is it set itself up for years of, being underwater, or a very tough drawdown where, you had this huge 80% plus drawdown. That's the concern, is could you have, a lot of folks are saying, well, wait a second, I thought 2022 was the drawdown. Well, you're having this whipsaw here of, okay, now things are ripping 100% plus higher and the fundamentals really aren't supporting it. And so what happens from here? What are my thoughts personally? First of all, in full disclosure, this is not financial advice. Also, quick plug, last week, an Unrivaled Investing subscriber posted in our exclusive Discord that, and this is a direct quote, "I've recently paid my second annual subscription and couldn't be happier. I've profited enough already to cover the next 20 years of subscriptions." It's not hyperbole. I actually did the math. So anywho, at Unrivaled Investing, my goal is to help as many folks as I can looking for, compelling ideas, sharing my own personal investment journey. I also offer, educational courses, learning how to read financial statements or value stocks. It's what I wanted to know when I first started on Wall Street. So I made that's designed to be affordable for investors at unrivaledinvesting.com. My thoughts on what happens from here. First of all, I think the AI revolution is real. You are seeing a lot of developments. I mean, just this past week, you had Google talking about, oh, we're launching an even better model. And then the same day, OpenAI is talking about, oh, we're launching Sora, which is a model where you can, provide video, where you could create video from text. And so the rate of change is just incredible. You are seeing this sort of uptick in terms of how fast things roll out. And I do believe that you are going to see a revolution, just like how the Wright brothers' first flight was, around I think it was 1903, and then just a few decades later, man was on the moon. I think you're going to have that type of revolution for humanity where it's going to be even greater. And in this AI impact and the super fast speed that you're going to see with things possibly powered by Grok, what you're going to see is that it impacts everything. It's going to impact how people get medical care. It's going to impact, driverless cars. It's going to impact financial, creation. I think even Mr. Beast was joking about, hey, this text to video. Are you going to put me out of work? You see Will Smith, he's joking about it too. Saying, oh man, this is getting out of hand. This is what the text to video looked like a year ago, and then he did his own spoof saying, hey, here's an AI video now, but this was actually him eating. But the reality is, if you were to create it and AI were to allow it, because they might say, hey, we don't want to, use someone's personal likeness. You could probably get an image like that or a video like that of him chewing. It has gotten that good. I mean, some of the videos are really impressive. And so I think, what happens from here is a couple things. One of which, you do have this revolution, and you're going to see it every year, and you're going to see names that are unexpected be the winner. And that's a key aspect. Looking at NASDAQ is you had Pets.com as one of the winners at one point and subsequently went out of business. And they, IPO'd and everyone thought it was great. And then, within a year or two, it was a donut. And so you have that aspect that you just don't know who that next huge winner is going to be. Is NVIDIA going to be that winner that compounds going forward, or will there be some sort of tech revolution, with an alternative chip, this language processing unit versus the graphic processing unit? Is it something like that? And also the legacy software providers, I think, are also going to come under pressure and face some challenges, as people can say, wait a second, these AI tools are getting better and better. They're not 100% there now. But I believe in the next year or two, you're going to go, wow, the rate of progress here is really stunning. In terms of stocks and how investors can benefit in terms of that journey, where do they go from here? Talking about the NVIDIAs, AMDs, ARM. I already did a video on ARM once again, talking about the absurd valuation, how it could be underwater for years. But I think it really does come down to execution, because that price has just gone parabolic. And whenever I see a price go parabolic, that is like a red flag to me of like, okay, if the price is going parabolic, what's actually going on with the fundamentals? And if the fundamentals now, require some sort of pie in the sky growth to get me to a satisfactory return, then it's just too hard for me. And so as an example with NVIDIA, and this is using AI ticker chat, the AI predict feature. So this is using AI to say, hey, how fast could NVIDIA grow in the years ahead? It's saying maybe it's growing at 26 to 45% in the years ahead. Maybe their margins are somewhere between 20 and 40%. This might even be low based on their recent margins. And what could their multiple be 5 years from now? How does this perform? And it's showing that even in this upside scenario, which assumes 45% annual growth, you're still not getting 100% upside. So this is the type of thing that's a red flag to me that says, okay, this is just bananas. You could have a lot of downside if you don't grow 45% in the years ahead. That is concerning. And that's the type of market we've been in, where these things have gone parabolic. And you can see how this compares with, in terms of the earnings per share that Wall Street's expecting versus AI ticker chat. The AI ticker chat models are the bars, and the lines are what Wall Street's expecting, based on aggregating different analysts, the high, the medium, the low. And, you can see it's not that, different in terms of what AI is predicting in this case or AI is expecting versus Wall Street. But either way, it's saying, hey, earnings this year are going to go, maybe around $10-15 per share to maybe over $35 or around $30 per share in the years ahead. And maybe that's how you justify this. I just find this, I look at this chart and I just go, man, maybe they achieve it, but it's going to require a heck of a lot of execution in terms of growth, fundamentals, profits, free cash flow to shareholders, in order to say, okay, you're going to justify you can get that return in the years ahead. And it's just too hard for me looking at it. Maybe it happens. And I think some, much smarter investors like Druckenmiller, I did a previous video, calling out what some of the super investors did. He has an approach where when he starts seeing a bubble, he runs to it. And that was something he got from George Soros. And so recently, in the most recent quarter, you see Druckenmiller, he bought call options to really leverage that blow off top potential that you have with NVIDIA. And I think you're seeing that dynamic when you see this parabolic type move. I personally think there are just easier plays out there. I recently did 2 videos on one of my top holdings, is a company called Fairfax. The stock's up over 100% since I first called it out to my subscribers at Unrivaled Investing. And that's an example where it still trades at, I'd argue, a very cheap valuation, around 1x book value, because the underlying fundamentals have increased so much and the starting valuation was so low. So it's still trading at, I'd argue, a low valuation. You could check out, that Fairfax video if you're interested in learning more. It was the video was in response to a short piece that I thought was misguided. And I think ultimately a lot of investors will do better off holding cash than chase some of these speculative investments. I think it's important to ground your investment framework in some sort of fundamental reality. I personally keep my cash at Interactive Brokers, see the link below. And I think that just a lot of investors, there's a chance that, they get burned if they decide to chase. There's only a couple of Druckenmillers in this world that can say, I see the bubble early and I'm going to rush to it before everyone else gets it. And then he's going to get out and he'll trade out. And I think a lot of people are just, I think ultimately a lot of people are getting overexcited, and now's the time to see the execution. When you see that 100% plus run up, you're going to need to see the fundamentals. You're going to need to see the execution. The revolution is going to happen, but it's not necessarily going to be in a straight line, and it's not necessarily going to be, a 100% jump in earnings. NVIDIA is posting the incredible. NVIDIA is the rare beast among them. But looking at everyone else, it's a lot of people are running up and they're not posting the 100% growth or a very strong fundamental figure that would make me say, oh, this can justify this valuation. If you have a different opinion, if you think I'm wrong for making this a comparison against the March 2000 peak in terms of the blow off top, I'd love to hear it. I personally do think that you have these echoes of this where you have the market largely driven by a few of these really hot AI related plays there is going to be a revolution in AI, but there might be, just like there was a revolution in e-commerce and the internet, but you had a lot of, churn as people figured out, oh, okay, Amazon.com needed to crash 90% from, its peak in 2000. So I think you're going to go through this phase of people saying, okay, well, what's the actual free cash flow that this business is going to generate, and can it support this price? And there's a mismatch right now. If you have a different take or you agree, love to hear it in the comments below. Thanks so much for tuning into Unrivaled Investing.